Limit on state and local tax deduction.
For more accounting information and accounting courses, visit our website at accountinginstruction.info.
The state and local tax deduction is an itemized deduction. It's on Schedule A, and there's currently going to be a limit of $10,000. What's included in the state and local taxes will typically be the state income tax, sales tax, and property taxes. In prior years, the state income tax and the sales tax, we had to pick between one or the other, usually the income tax being higher depending on the state we are in, and then having the property tax. Now, whether you like this law or don't like this law probably is determined by where we live in the country. And that's the problem with the law in the first place, meaning if we live in a place that has high prices, high cost of living, such as, say, California or New York, we're probably not going to like this law, or many people won't, because they are going to be paying really high state taxes, and therefore there's going to be a reduction in the amount of state taxes that can be deducted. Also, the cost of housing there is going to be much higher as well, meaning their property taxes are probably going to be much higher as well, which is more likely to be capped under those high income area states. Also, remember that there is that overall push in order to get people to use the standard deduction or be off of the itemized deduction by increasing the standard deduction in the first place. So the combination of having the standard deduction higher and then removing or giving a limit to the cap on the state taxes will do a lot to put more people into a situation where they'll be using the standard deduction and not itemizing. This is a law that had a lot of controversy to it, and there was some questions as to whether there was some political incentive to the law given the political leanings of the states that have higher taxes and the states that would benefit from having a higher cap for the deduction. From my perspective, this is one of those laws that would make sense. It makes sense from the beginning. In other words, I think it was a bad idea to put the state taxes as something that was federally deductible from the beginning. But it's an example of one of those laws that once in place, it's difficult to remove because the reason I don't think it's a good idea if you were to start from scratch is because the states should be sovereign to determine whatever type of tax they want. That's the purpose of having United States that can then each state can determine how they want to tax themselves. When the federal government then influences the taxes by having it deductible on the federal taxes, that then plays a significant influence over how the states will conduct their tax codes. Also, it's very difficult to have a tax such as state tax being deductible when the cost of living across the entire country is vastly different. So how much money you earn is a lot different. It doesn't correlate to your living standards because you may be living in a place that costs a lot more. So to have a law that's going to give a flat deduction and it's going to vary based on cost of living doesn't make a lot of sense. However, to remove it once it's in place is really difficult. So to me, it's an example of not thinking too well or not thinking it through when the law was put in place, and now being stuck in a situation where if you're going to remove it, it's going to be painful to remove. And I live in a state that has a high cost of living and high taxes. So I know a lot of people that are going to be negatively influenced by this law and are not going to be happy with this law, and their taxes may be increased solely because or mainly because of this law. But from a big picture perspective, it makes sense to me to remove it. From a big picture perspective, it's just one of those laws that are difficult to remove once I think it was poorly decided to put in place in the first place. And hopefully on the state levels, we can then adjust the state laws to get back to normal or get back to something that's acceptable by adjusting the taxes on the state level after they're not being interfered with or influenced by federal taxes.
For more accounting information and accounting courses, visit our website at accountinginstruction.info.